balancing this economics sometimes, because for a country like America, consumer confidence is still low, consumer spending is low, and the American government they keep striving every month, every quarter to get Americans to spend more, because if they're saving more, of course, there's no money to move the economy, or at least that's what the US Fed says. And for the American economy, 70% of it is driven by consumer spending. So if we're saving or saving less here and spending more, am I missing something?
No, you're not missing something. When you talk about savings, right? You're talking about putting money together. Is when you save and you don't invest it. That is when you run to what we call in economics the paradox of thrift. In which case, a savings might be good for an individual, but it may not be good for the nation if everybody just savings and we are not investing it. So there's no issue about saving. You can even see in America, they are saying, look, let us continue to focus on employment and then continue to focus on growth. Those are the two things that Obama has been focusing on. In Nigeria today, when the MPC meets or the economic team meets, they don't give us figures on employment. We only get figures on growth. We don't get figures on capacity utilization. And there's no way you can divorce these things from what you are doing. Because whatever money you push out, you must know where it is going. And each time it goes, you must be able to track it, that it is helping to increase employment. So that you can know that correlation. But a situation where, we are still restricting. America is not restricting their economic policy. They are not. They are still expansionary because Obama is saying he wants to create more jobs. They should give him almost like $500 billion to be able to push into the economy and create more jobs. That's correct. I mean, he has seen the capacity. He has seen the capacity availability. And he believes if he pushes money to it, capacity will increase, output will increase, goods and services will increase, and eventually inflation will go down. Because I keep saying it, the solution to inflation is not, tinkering with interest rates and all the. No, the long-term solution to inflation is increase in goods and services, and you cannot increase goods and services without having some inflation. They go hand in hand. There's positive correlation. You expand, you do expansionary monetary policy and fiscal policy, and then that translates to employment, goods and services, and that's in effect.
So between I'm still staying with what the World Bank, the IMF said about our inflation trend. Now, between now at the end of the year and of course 2012, if, like the IMF says, if inflation continues to go higher or continues to be a threat, like even the central bank also agrees, do you see the central bank still tightening? And what I'm particularly concerned about is what is going to happen. Are we going to get to a point where the central bank might not be able to tighten or increase rates, or what is the maximum for the central bank in terms of increasing rates?
What I think will happen is this. The central bank will realize at the end of the day that it cannot. After
one or two more.
But I know, they might still bring increase in interest rates maybe once, twice, or thrice as we move into the new year. But it will get to a point where the central bank will realize that it cannot continue to increase interest rates forever. It's not going to work. Are you possibly going to increase interest rate to 15%, 17%? It's not going to work. What will work is you will go back to the structural problems in the economy and begin to correct them over time. And then in terms of monetary policy,
while it's correcting this, the structural deficiencies, these are not things that will happen in maybe one quarter. Can it happen?
It will not happen.
So while that is going on, the central bank still has to take a decision.
Absolutely. And that's what I'm saying. We are having these problems because of our fixation on a particular interest rate regime. There's no way you can divorce all these things from trying to achieve a 150 naira to a dollar. If you don't leave the naira to find this level, chances are that you continue to deplete the reserve, you continue to increase interest rates, you continue to reduce money supply, and the economy suffers for it. Growth is going to be the first major casualty, and as we move on, you will just keep increasing interest rates. You will not be able to come out of it. It's a cycle. And the only way you can break that cycle is to say, okay, at this point, I'm going to allow the naira to, to be a little flexible, probably go to like 160, whatever.
160, isn't that too high? Okay, let's come into the naira now. There's been, in the last couple of weeks, demand surge. Now, for this week alone, the market...
the central bank is having challenge meeting the demand.
Is it intentional?
It's not intentional. Probably they don't have the dollars.
Because our reserves, the latest data from the CBN shows our reserves has hit $34 billion from around 31 or 32. Okay. And this week alone, market demand has been over $1 billion, and the central bank at its forex auction has been only able to provide $700 million. Is it embarking on the program? Is it trying to depreciate the naira? What is going on with the central bank's policy with the naira, supporting the naira?
The problem with supporting the naira is that you must have the dollars to support it. The central bank does not seem to be increasing or to be having the capacity, or Nigeria, let me not say the central bank. Nigeria is not having the capacity to increase its earnings in dollars in the short term. Probably it may have in the medium term. But what matters at this stage is this: how can we increase dollar inflow into the economy? If dollars are not inflowing into the economy, CBN is probably not going to have enough dollars to sell in the marketplace. So and when you don't have that,
we're not getting enough from our crude oil exports.
We're not getting enough from our crude oil. We're not getting enough from other foreign investments that should come in. Security challenges will scare away investors the more. As markets are depleting and markets are troubled, investors will stay away. Everybody wants to fly to safety. But by way of final comment, I would say increasing supply of dollar has become critical if we are to have economic recovery. In addition to structural adjustment of a lot of our structural deficiencies that we've been carrying for decades, I can't see how Nigeria can increase their dollar earnings within the short period of time. The only way is to increase your output in the crude oil sector. And you cannot increase your output if you are still a member of OPEC that has given you a quota that you cannot go beyond. So part of what you should be thinking about, I said it earlier, is our membership of OPEC. It may not be now, but sometime in the future, it will become critical, and we'll be able to say, look, if we want to double our earnings, then we must break down whatever constraint that we have that's making us not to achieve that.
Okay, Wale, on a final note, I'm looking at the naira prices now, dollar price against the naira at the foreign exchange market. Now, the central bank at the beginning of the year, even from last year, says it to try to support the naira at between 150 and 153, give and take.
It is still doing that.
But right now, it's still at the official market. At its last auction, the naira traded as high as 154, and at the interbank, the naira has hit 157. That's high.
No,
so can the central bank still keep it?
No, CBN is going to be more particular about the 154.
At the official market?
The official market. They are going to be more particular about it.
But that has gone beyond its target of between 150 and 153?
Yes, because they couldn't meet the demand for the last time. I think they were only able to meet about 300 and something when the demand was 400 and something. Yeah. If they improve their dollar influence to the market, the price will definitely adjust. I don't have a problem about that, because these are things that are within the control of central bank. As long as they have the dollars, they can even bring the rate to 100 naira to $1
if they want.
If they want, it's within their control.
Okay.
But what is not within their control is the dollars they will earn from the international market, and I think that's what we should concentrate on.